Donald Trump's election victory has sparked a major shakeup in stock markets, commodities, and currencies around the world. Traders have been spending the last few days trying to sort out who could be the big winners, who could be the big losers from the policy changes that are coming as a new U.S. administration takes over. Here I'd like to take a look at an interesting split that I've seen show up in the markets between old economy stocks and new economy stocks. For the last several years, of course, we've seen some really great momentum in new economy stocks, alternative energy, information technology, things like that. But something that struck me in the last couple of days was how the Nasdaq has started to underperform the Dow and the S&P. We've seen a rally in what we'll call old economy sectors that stand to benefit from some of the policies that Donald Trump has been talking about. So things like infrastructure spend, boosting heavy equipment, and also construction. Also, he's talking about trade, potential to boost the manufacturing sector. Also, his policies on energy set to potentially boost fossil fuel sectors like oil and gas and coal relative to alternative energy, which had been President Obama was a big proponent and investor in alternative energy. They may not have the wind at their back. The wind seems to be shifting in another direction, and we're seeing that across a number of markets. The first one I wanted to highlight here was the Nasdaq relative to the Dow on this chart here in the middle. We can see that through after trading fairly even through May and June and into July, as we moved into the summer, there was a huge divergence. The Nasdaq kept on climbing while the Dow kind of fell. After the Trump election, though, then boom, we've seen a big recovery in the Dow, and we're seeing the Nasdaq start to roll over. I'm going to show this as well on a shorter term chart here, where you can see since the couple of days before the election, the Dow has been outperforming relative to the Nasdaq. That's something we could see continue in the coming months. And why am I saying this? Let's take a look here at copper and some examples of this. We're seeing definite accumulation in stocks. So let's look at Caterpillar here. Caterpillar has been under accumulation for much of the year, but look on the Trump news, big gap, big breakout. And what does that signal? Potentially, people are figuring big new demand for heavy equipment and for earth-moving equipment as they start to build more infrastructure. Regardless of whether he actually builds a wall or a partial wall on the Mexican border, Trump is looking to do more infrastructure spending regardless. The big one here to look at, though, is this explosive breakout in copper. We'll start with the short-term chart. Look at this. It's been not doing much in the last few months, and then boom, it's just taken off. Again, copper is used in everything. It's used in machinery. It's used in construction, and it's been very sensitive to swings in the overall economy. Historically, copper has been more sensitive to China, which is why it had been in the doldrums for much of this year. But if things start changing in the United States, people are already expecting increased demand for metals. Copper is the lead, but we're seeing this pickup in other metals as well. Now, we do have a bit of a reversal here. This spike was so big from 210 to 270 over a few days. Copper got extremely overbought. Some profit taking in a correction ahead of the weekend. Not unusual, not unexpected. However, what's more important is let's put a longer term perspective here on copper to show just how strong this rally really was. Since 2011, copper has been in a falling channel. It had stabilized over the last year or so, and now this month and this week really, we're getting a big breakout from a massive long-term downtrend. And not only that, look at this on the monthly RSI, we're getting confirmation of an upturn. Here, the monthly RSI retaking 50. That's huge. Technically, says that we're now the trend has bottomed out, and now it's starting to turn back up again for copper, back up again for old economy sectors. But where is the money coming from? There's two places it's coming from. We're seeing generally money going back into the stock market, coming out of defensive havens like gold. But another place we're seeing it come out of is people taking profits in momentum sectors that had done really well and are up a lot. And that's not unusual when people want to go value shopping to take money out of their winners. So, because we also see the same thing when people get margin calls. So let's take a look at a couple here. Let's look at Apple. Apple's had a pretty good run this year, 89 up to 116, tailing off though from this double top. Trend line break here, 50-day moving average break here, dropping off after the election. Why? People are taking profits in Apple. Here's another one, big momentum play here, Netflix. Trading sideways much of the year, had a big run up in October, but now that it's got a lot of profit built into it, having rallied from 84 in the summer to 120 29. People are taking money out of this to go plow in to other areas. So we're definitely seeing a rotation of capital, not only between markets, but also within markets. And it does look as though we're seeing a definite shift back towards what we'll call the old economy, traditional sectors that stand to benefit from policy changes as Donald Trump takes over office.